Right. Right. So let me start from here, right? Okay. Thank you. So thanks everyone for coming. Some um, so, right. So we have slight issue with the projector screen, but we're trying to see what we can do. You can see these are we testing out once in a while on the screen in front. We do have a side screen and screen as well. Alright. Uh, okay, so for today's session, we start with physical session in physical tower, number 6, as well as also on Zoom. Also, it will also be recorded on YouTube Live. So let's say you want to do something that we are sharing today, we can still use the full content on YouTube in our back as well. So the certain parts, or you're not sure certain parts that you might have not sure or heard correctly or not. Okay. So along the meantime right now, we are still screening some of the information that we have here. Just to share with you, and I can just let you know, if you're interested or you're not sure, you can find out more by asking of our colleagues in the lab. Alright, and some of you will be into. These are not yet capital of food. You can see where you are doing first, or you can eat later as well. Right, but we need to the third number of the as well. Alright. And we're expecting quite a few news today. So I appreciate if let's say those are coming in later, you're fun to sit as well. So we see and also allow sit in front. Alright. So you're going to find seats at the back, you can come to the front, there's still sits with chairs in the front as well. Alright. For those at the side, you find the light, the you can put the blinds down as well. Alright. Yeah. Thank you very much. So we'll start very shortly at 6:30, 6:32. So around 5 minutes or so before we start proper. So just so that because see the promotions and then go food first. Thank you. Uh, testing the audio first. Let's test the audio for the online audience. Is it still is it clear online or is it muffled? All right. So let me test again. You confirm, Pinchong. You can hear me from here, right? Speaker, All right. One of our colleagues will be testing the audio. Yep. So can you hear? Is the audio going to be clear or is it muffled now? Can you hear? Yeah. Yeah. Thanks for sitting in front. Thank you. Yeah. Now, so those at the back or those that came late, you have still seats in front. So feel free to sit in front as well. Right. Okay. So I will not put the mouse too near the mic. I think that's why it's muffled as well. Right. So I will keep it a bit a distance away. Okay. So we'll start very shortly. Hmm. Okay. So thanks everyone once again for coming in early. All right. For today's session. Right. So today is the Thursday evening. Right. Thank you for joining us today. We have with us today sharing on the Singapore market, as well as we also have invited our guest speakers from Macquarie as well, who will be sharing more about the warrants. Okay. So to start off, I'll just share very briefly on some promotions that we have right now. All right. So for those that really appreciate, if you are, I will be able to write them down so that we can start already. Okay. Thanks everyone. Okay. So for the first promotion that we're sharing today is basically the refer a friend promotion. All right. So basically, if you are not aware, you can actually create your own personalized referral link to share with friends. All right. So basically, if you scan the QR code and enter the link, you enter your account number, you'll get your own personalized referral link that you can share with friends. When you share that with your friends, then the friend will open the account with that link. All right, and fund the account for $3,000, you will get $68 per account refund. But the new account must be a new to Phillip account. All right, sorry for the screen. The projector has some issues today. Right? So the link is over here. So you scan the QR code and you enter your account number. You will then generate a link for yourself. And that link can share to all your friends. It's the same link for all your friends. As long as you open an account through the link and then you fund the account, you will get the reward of $60 per account if they are new to Phillip. Alright, and then for the new account, they also have their own promotions that they have ongoing. Currently, we're giving free shares if you do funding, as well as trading on the new account. As again, we do have also ongoing share financing promotion. So basically, if some client want to do investments first through margin, wait, I think there's still some zooming in. Okay, so appreciate if you at the back can also keep the volume down a bit. Thank you. Right. So basically, if you have a account with us or for share financing for margin trading itself, you can actually use the margin facility to trade beyond your cash that you have deposited in the account through the margin, so that you can get positive carry. For example, if you get REITs that is giving you 7%, 8% dividend yield, but you're only paying 4.8% for the margin financing for Singapore dollar, that's in a sense you're getting an extra yield on the investment itself. Right. Sorry for the screen. To do with some ongoing issue. Right. So next we do have a promotion, which is actually the main promotion. Yep. For today. Uh right. So we have the ongoing this Macquarie promotion. So you can actually get $88 as long as you are new to trading of warrants. If you have not traded Macquarie warrants before over the past quarter, right? Meaning for the previous quarter from the Q2, right? So from April to June. Then the promotion that for this phase is ending in 30th September, but we will gotten the likelihood we will be extending, right? But right now it's ending on 30th September. You trade two buy trades of at least $3,000 for any warrant, at least 3K. For two buy trades, you will get $88 at the end of the promotion period and the processing period. All right, so this is for the Macquarie warrant promotion. So later we're sharing more on why you want to consider using Macquarie warrant. Right, so this is also the free service, basically market depth. You can actually apply for free. You can actually access and see the market depth itself for the orders. So it's easier for you to place orders to see what is maybe some of the support level, resistance level, and see the different order quantity and the orders in queue for the different counters. Right, so we also have our own Telegram page. Just can scan the QR code. You can then join the Telegram page. All right. Then we do share like daily or news and links updates, right? So on the market itself, we'll share as well. Right. Okay. You know. Okay, so this is a QR code you can scan. If you miss this QR code, you can actually ask our colleagues later. Right. So this is a QR code you can scan. If you miss this QR code, you can actually ask our colleagues later. Okay, so this is a QR code you can scan. If you miss this QR code, you can actually ask our colleagues later. If you miss this QR code, you can scan. If you miss this QR code, you can actually ask our colleagues later.
Okay, so let me share the slides proper. Okay, so today's topic mainly will be on riding the interest rate wave for Singapore banks and blue chips itself, right? So I think basically a lot of us are interested to know the impact of the interest rate cuts coming in September, which is actually just this month, just 2 weeks away, as well as the impact on the banks and some of the blue chips that we have in Singapore, if especially you're trading in Singapore mainly, since you are in Singapore, right? Right, so the projector today is still a bit haywire. Right, so for those at the back can still see on the side TV and the screen, I think you should be screening. Right, I'll on it once it cool down again. Also, for disclaimer wise, we have some examples mentioned, but it might not be a purchase or sell recommendation. All right. Okay, thank you very much. Okay. So do note some of the examples that we mentioned today will be just for illustration purpose of whether what you can consider when you're trading, but not a buy or sell recommendation itself. Okay, so this is the main content I'll be sharing today. Okay, so this is basically the some of the numbers I've put as of 4th September in the daytime. So before the end of the closing hours of 4th September, which is yesterday. Right, so basically you can see some of the performance when comparison with bottom two is the US market as of end of Tuesday itself, after the one of the pullback on Tuesday. Right, but you can see on top, to the bottom, you can see basically some counters actually did outperform the US market. It's not saying that Singapore is totally boring. You don't get any returns that's better than US market. Not really true. Right. Of course, US market has specific counters that do better, but as a market as itself, DBS doing 20%, year to date, UOB 10%, ST Engineering 12.5%, Singtel is 25%. So saying that Singapore is totally boring this year, I don't think it's true. Normally across the years, maybe. But this year, I think it's been quite exciting for some of traders or some of the investors that are doing long term that I've entered during the lull the last 2 years. All right. That's by okay. This is a right. So basically for the market itself, right, just to share as a overall, right, because Singapore also impacted a lot by the US market. So basically, US market is down, right? Yesterday, yesterday night is also today morning, right? And Tuesday sell off also was due to some of the numbers that was released. So mainly through the weak manufacturing data. Right, so this is the data that I managed to pull out. Right, so basically all of them are below 50, which means a contractionary region. So even though it's a bit better than that of July in August, so 47.2% for ISM manufacturing index, it is still lower than that of the consensus expectation of 47.9. So it's below expectation. So technically it's a bad result, right? So bad result means normally market will pull back further in fear of a recession incoming for US. So US basically have always been expecting to be on a downtrend. Just that we all hope that the recession or the downtrend period will be a soft landing, meaning it's a gradual decline for the economy as the US Federal Reserve continue to cut rates that stimulate the market. Okay, that's a bit fast. Okay, first, let me just mention first before I on the thing again. Right, so basically the next one is the jobless claims is upcoming, and basically today. Right, jobless claim today as well as tomorrow we do have other data upcoming. Right, there is more significant because labor data was one of the first reasons why the US market had the downturn in early August. Right. Okay, so we're also looking at the expectations of 229,000 initial jobless claims, right, compared to 231,000 previously for the week-to-week basis. Okay, so the main goal is that when we see all this data, we are looking at the data and analyzing along the way. What we are hoping to get is that we get some expectations that the US market will be in a region for soft landing, versus, or will it be a more like sharp decline within the economic performance itself? Okay. So this is the market update. So these are two market days that have a high volatility impact. If you are trading along all these days, you may have seen these 2 days itself. First was the 5th August day itself, and recently the Tuesday, 3rd of September. Both days we saw more than 3% declines for Nasdaq, which was one of the better performing index across for the past few weeks and past few years, right? So of course that will be the impact if you are trading in the US market or you're trading in Singapore market as well. You will correlate to see that the next day in the Asian, Singapore, Hong Kong, US, Singapore, Hong Kong, and China, all the market in Asia also followed the US trend on the subsequent day of the 5th August and the 3rd of September. Okay. I'm sorry for this. We're trying to fix the thing, but I'm not sure why it was exceptionally frequent in terms of frequency of the shutdown of the thing. I think it's the overheating of the projector. Right, so basically in general, September have always been a more weak month in performance. Right, some data, if you actually read the news and some of the analyses of the past September performance itself, for the past 9 years, they have not really showed any month that managed to do a positive month performance. All right, so that's for the US market. Of course, Singapore might be a bit different, but that generally signifies some of the weak performance of September month, which is the month after most of the big earning results is over. All right. And we also expect that the September itself, for this month itself, for this year, 2024, there's more volatility involved because of the Fed rate cut, which is the first rate cut that was expected, anticipated, and wanted to happen for a very, very long time. Right? They're delaying for a very long time. So likelihood is that we expect the decline in the stock valuations, and likelihood also, if you are long-term investors, you might be looking for buying opportunities, right? But also you might be afraid of short-term shocks to the market. You might be seeing maybe short-term volatility, downturns, potential, not only in the US market, but even in Singapore. So you might be preparing for this volatility involved, right? So the upcoming data I mentioned here, of course, Wednesday is already over, but Wednesday was Thursday itself, Thursday morning, Wednesday night. US trade deficit, job openings, right? Then we have that. Then upcoming for today, Thursday morning is basically tonight, right? US will be releasing the weekly jobless claims. And then for tomorrow, for Friday itself, Friday evening, they'll be releasing on the August non-farm payroll as well. Right. So these are the labor data which I mentioned. They was significant to the US market in early August, which was a leading reason for the downtrend on the 5th of August itself. Right, so basically the next slide, of course you can't see now, but let me just bring you through. I'll show you all in a while. All right, so the next slide is basically on our geopolitical tensions. All right, so we do have a very standard tension that we know. First one is Russia-Ukraine. So basically it's still ongoing. All right, so Russia and Ukraine have been at it for many weeks already. And Ukraine recently, over the past month, have been managed to counterattack into Russia. That actually escalated some of the tensions inside. But then Ukraine mentioned that it was basically an attempt to so-called safeguard certain territory and to so-called classify the conflict within a certain region of their choice as well. All right, but basically this means that there's an extended front line for both Russia and Ukraine, and likelihood there will not be any very short-term resolution yet. And I think as of recent, if you follow the news itself, if you're following the Russia-Ukraine news, all right, Ukraine did see quite a bit of changes in the leadership. There's a recent, these 2 days, there's some resignations and some changes, some forced resignations for the Ukraine government. And there's some talks about any nuclear risk involved because of the missile attacks between the two countries. All right, so of course that basically will derive risk in 2 aspects mainly. First is the energy market. Second will be the agriculture market. Because no matter what happens to Ukraine, Russia, right, Ukraine is still a very big part to play for the agriculture, more on the grains itself. If you're following the commodity side of things, then they are still a very big part supplier of some of the grains in the market in the world. Okay. Next one is for geopolitical tensions is the supply chain. Okay, so of course, through the past issue, right, we have COVID, we have trade war, we have everything. So the issue is that supply chain as a geopolitical issue is that there will be a shift away from China. First thing. Second thing is that there's a shift away to consolidate of the shipping routes, right? Recently, I think last year and this year, you see some of the shipping routes being disrupted in the Red Sea, as well in a canal route where there was a traffic jam, right? So called that actually caused a delay in the supply chain, and that actually led to a lot of companies or countries looking to actually diversify their supply chain network, so called, to actually better benefit themselves and better consolidate, safeguard their interests itself. In upcoming, we do have US elections, which we expect if Trump do win, there might be certain level of a tariff coming in. So when tariffs come in, then there might be trade conflict again and trade war. So likelihood, a lot of countries, a lot of companies might be looking to preempt that, and then they might be looking to move certain supply chains issue itself. So the impact is that your impact on sourcing of materials, impact on shipping, impact and passing this cost will normally be passed to consumers. So you should see increase in cost in shipping. You should see increase in cost in trying to do logistics in the short term. But in long term, after it becomes a bit more mature, you might see a better situation across the board. And that might actually lower the cost again, because now you have more supply chain networks and more supply chain choices. And that competition might then lead to lower cost in future. Right. So, but short term is still going to be a higher cost for most people as they are setting up these networks. Okay. And for US, China is ongoing for very long already. So basically, the main restrictions that US is trying to do is on tech side, which is on the IP, the technology itself, right? Then we have an overlapping interest in between US and China. So they have overlapping so-called benefit interest in both economical and political sense, right? So right now, China is buying a lot of LNG, which is a liquid natural gas from US, on a big purchase consumer, but yet US not happy, right? So when China buy a lot from US, technically they are helping to reduce the trade deficit. It's a good news because technically US want to reduce that for a long time, but they're not very successful in doing so. But yet at the same time, within the US, they're not very happy because they don't want to be over reliant on the energy market, for the energy market for the sales to China itself. So that's why there's some concerns of whether they are over reliant on one country for the sales itself for the energy market. Then of course there's US Treasury bonds that's actually maturing, and China itself has been trying to reduce their exposure to the US Treasuries itself. Okay, and next is that US is still blacklisting quite a lot of China tech firms, right? So even chip company, your network companies, your infrastructure companies as well. Okay. So then we have this upcoming issue, the rates rise, right? So very recently, for today, this morning and yesterday night for US hours, normalization between the 10-year and 2-year Treasury yield, meaning that first time since June 2022, finally the 2-year yield is slightly lower than the 10-year yield, right? Meaning that it's a normal curve, right? Instead of inverted yield curve, right? But it was just for like less than a few thousands of percentage basis points. So it's a very small, minute amount, but it's a good news in a sense. But some people say that it might be a bad news because this reversion could actually be a forecast of any recession coming in. Okay, so both of them, both of the 10-year and 2-year yield were around 3.79. So the difference of normalization was just a third decimal place, thousands of decimal place of the basis point, right? Then you have the market, right? So market will normally look at 2 years and 10 years as a comparison. But for the US Federal Reserve, when they are analyzing the situation, they look at the 3 months and 10-year yield. That is their gauge for the US Federal Reserve. So instead of 2 years and 10 years, they look at 3 months and 10 years. And that one is still very steeply inverted. All right, still more than around 1.3% difference between the two of them. Okay. And one of the recent news that was released is that for Atlanta, the Fed Reserve, the president, they actually commented that he's more supportive of rate cuts, mainly to target for jobs itself, meaning the labor market, job market, despite inflation still being above 2%. Basically, when we are using cutting rates, right, we are looking at the potential of inflation increasing, right? Because when you reduce interest rates, there's more spending, there's more purchase, there's more lending, everything. You will increase the inflation potential for the market, for the economy, which is not what the Federal Reserve want, which is why they have been putting back all these rate cut for a long time, because the inflation numbers was very persistently high over the past few weeks and months. Right. However, now they're looking at the job data and they're more worried for job data. So Fed have two mandates. One is a job market, one is the interest rate itself, right? The inflation. So when they move interest rate, they're not impacting only the inflation numbers, they're also looking at the job numbers. So now they might be more concerned, or they have more reason to be concerned for the job numbers, which is why they are going to move ahead with the interest rate cuts, right? So the main issue is whether or not you believe the rate cut is too fast or too slow. Right. So basically, this is a snapshot on 5th of August, the first correction, right, of the US market. So when it first corrected, you can see right now the interest rate is at 5.25 to 5.5, 550, right? So when it first crashed, the US market on 5th of August, the first correction, big correction, the expectation of rate cut for the September Fed meeting was as low as 450 to 475. Right. So that basically means 3 rate cut in one shot, 75 basis points. For the higher one, the 90% was 50 basis points cut. That was on the day of the downtrend, right? Of course, that was an overreaction. That was more of a reaction because of the market downturn, right? But as you move to now, okay, so we move to now, right, as of today, it's 4th of September, all right? The rate cut expectations now normalize more to between 1 or 2 rate cuts. Okay, so between 1 or 2 rate cuts meaning that in between 500 to 525 or 475 to 500. And the percentage between the two of them is actually quite close, 61% and 39%. Okay, so this is the expectation. So most of people expect 1 rate cut, 61%, but there's a potential that Fed might also do 2 rate cut one shot. Right, so this chart is basically mean. The next one will be for 7th of November, meaning the next Fed meeting, right? What was the expectation? So this was expectation on 5th August, right? They expect up to 425 and 450. The majority, meaning 4 rate cuts by 2 Fed meeting later. That was on the downturn day, followed by currently now, right? Yesterday, we're looking at 450 to 475 majority, right? But at least 475 500, which means at least 2 rate cuts by November, and some likelihood of 3 rate cuts net by November, meaning either 75 basis point or 50 basis point cut by November. Okay, but to do note is that even with all these rate cut coming in, right, if you compare these numbers, it's all still going to be above 400, 4%. And Singapore is already below 4%. Okay, so we say that rate cut is coming in, rate cut is incoming, and everything, impact the market, everything. But interest rate environment, even with the rate cut, is not low. Right? Just to set the tone, right? It's not low. It's just that cutting rates is good for us. We're expecting good news, expecting benefits of cutting rates to the markets for financials, for real estate and everything. But US is not in a low interest rate environment, even after rate cuts. So just to take note, for 2024, it's not possible to enter into a lower interest rate environment yet. Okay. Then next, after November Fed meeting, 7th of November, right? But before that, got something very important happening. 3rd November, you have the US election. So it's actually quite close, right? So some people think maybe the Fed might not move too much on 7 because it's too close to the US elections. Then they might do more on the September Fed meeting, which is my personal point of thing, right? So I believe that because it's too near, so they might want to do the 2 cuts this month instead of in November. Right? So at least they have more reaction time by November itself. That's my take. But most people still expect only 1 rate cut this month. Okay. So right now, Harris is leading Trump, right? But even though they are leading the election by numbers in terms of the popularity contest, Clinton also lost the contest even after they win more votes. So it's not only about winning number of votes in popularity, but also in the states, how they actually formulate the swing states and how to formulate the elections, electoral votes itself. Okay, and Trump numbers currently is more than what they have performed in 2016 and 2020. Okay, so the focus will be on the swing states still for both Trump and the Harris side. And generally, you can see that Trump, I will say, they are more pro-domestic economy for Trump, and he is likelihood going to bring in more tariff for external. So more likelihood of leading to a trade war incoming. Whereas Harris will most likely be maintaining a status quo similar to what Biden have been doing, but also meaning that she might push ahead again with their agenda for higher corporate tax. right? So that might or might not be a bad news for the US companies, right? They have a high cash power overseas. Okay. So the next slide is showing the so-called the election this comparison popularity. So you can see before Biden dropped out, Trump was definitely leading. You see the red line over the blue line, right? Trump is definitely leading. Of course, not by a lot, because the magnitude they expand a lot, but it's just 1-2%, right? But it's definitely Trump still leading. But as he take over and the campaigning starts, actually Harris managed to overtake quite fast, right? So this actually did show still a generic trend towards a tendency of what people wish, which is people wanting a status quo environment for the economy, even if Trump might be good for certain segments, right? Because as a whole, most of the economy, most of the participants in the economy want to have more stable policies and everything instead of any potential trade war right now. So we bring back a focus back to Singapore, right? Because this today's topic is on Singapore itself. So Singapore equity in August is down 0.4%, right? We were up 3.7% in July, right? Performing for this August itself was REITs itself, real estate and healthcare sector, all right? So the REITs sector is still down, right? So they actually rallied for REITs, expecting rate cut, right? So REITs actually rallied 9.4%, 9.4% over the July to August period. 2 months period, 9.4%, but they're still down overall year to date. Okay. And for the Singapore itself, the export number also down 2% in this July 2024. And it's an improvement of the decline, which 2023 last year was a decline of 13%. And one of the reasons why you can see a decline in the Singapore exports, and it might continue, right? Two reasons. One is a weakening global demand overseas, right? Overseas have a weaker demand from China, from Hong Kong, from the regional countries. Second reason is if you have seen, as of this year, not say this few months, but this year, Sing dollar is too strong. When Sing dollar is very strong, it means that our export is very expensive, right? So people buy our thing more expensive, but we be strong. It's good for us when we go travel. We go traveling, we find it very happy because everything is cheaper. But when people are going to buy our items and exports, they find it more expensive, they might reduce their demand. Which is why our export numbers might maintain low for a while, unless Singapore government do something about the exchange rate. So tourist numbers wise, we did see an increase year on year basis, right? Which is a good thing for retail REITs and some retail companies in Singapore, or even in the gaming, like Genting Sing or all that, right? And even our SETs and Singapore Airlines, right? Because basically all them are related to tourist numbers, right? Even hotel as well. But the increase mainly was a jump from the China arrivals, right? I don't think they have yet reached back to pre-COVID level for China, but with this increase, technically it's a good news still for us, which is trying to recover our tourist arrivals back to pre-COVID. Right now, I think we are very near, but not yet above the pre-COVID levels as a whole yet. Okay. Then the construction sector also looks positive for us this year, for second half of the year, and going into 2025. There are three main reasons, right? So we do have the two integrated resorts, both are expanding, MBS and RBS both expanding. Third one is that we do have T5 construction. So these three big projects actually bring in certain level of boost to the construction sector, both for the supply, demand, their logistics and everything. So the general trend for construction might be a bit more positive. So related companies might see an increase in demand for the trading itself. So not only do they have the big companies, there is the main companies doing expansion, but we do have in Singapore some smaller companies doing small contracts. All right. So I think if you are trading in those small contracts company, you may be aware of what I'm mentioning on. And they are doing either refurbishing work or materials itself as well. So this is the snapshot. So what I mentioned. So you see for the REITs itself, for August, up 7%. Year to date, still down 3.8% as of end of August. Right, this is as of end of August. So which is the one that have outperformed. But if you see it for year to date itself, Singapore overall still did quite well, right? And this is the right side is other markets, right? And one of the highlights that you might be looking at also might be the gold itself might be doing quite well, but it have been too well already, and there might be some pullback coming in expected with the US dollar itself as well. Okay, so next we do have the Singapore banking sector. Okay, so okay, yes, our on is very soon. Right, so basically the 3 months SORA numbers, right, is down 3% month-on-month. So it's to 3.64%. So I mentioned just now, basically you can see our numbers is 3.64, right? You compare US after the rate cut by end of year, lowest 4.25 to 4.5. So we are still much lower than them, and US is still in a higher interest rate environment. Now, our bank's earnings itself generally for second quarter, Q2 2024, we did see an increase in the PATMI, the numbers for year-on-year basis, 6% increase for the second quarter. And the fee income, not just the net interest income and all that, is expected to grow 18%. So it's a good news for those that trade the banks, right? If you are looking at, is the interest rate cut coming in, will it be negative to the Singapore banks? Right, so of course, Singapore banks also been preparing for it. You might see a decline in your net interest margin, right? But they can actually still earn back two things. One thing is they increase back by the fee income, meaning from the card services or loans, card services and your other products itself that they are selling, investment income also. Second thing is that even your net interest margin drop, your net interest income itself can still increase because you have a larger pie. Lower percentage, but larger pie, you can still earn a larger revenue through net interest income as well. Okay, so this is the thing. And the NIMs itself likelihood will dip, which is very, very common, very, very expected, so-called. But they are trying to manage it by increasing the overall total pie that they have for the NII itself, net interest income. Okay, so the bank also will move certain funds from shorter to longer tenor. That's one thing. Then they get higher yielding results for their short-term funds itself. So the bottom part is the main one. Expectations for continued double-digit fee income growth, right? So this is basically the component that will help to buffer later on as US continue to do rate cuts. So rate cut is not only 2024. We're not looking at only this year, 2-3 rate cuts. We're looking at 2025. Will you continue to do rate cuts? And what is the expectation in the year of next year itself? The full year next year, looking at around 4 rate cuts, total 7 rate cuts by end of next year. Right? So with that, the yield will really drop for the US market, and it will correlate to Singapore, the yield itself also. Interest rates will decline. So the banks preparing themselves will be looking at how to increase the fee income itself. So a double-digit growth continuation will be a good catalyst or motivation, so-called morale booster for the investors in the banks, right? So next, I will show some numbers. This is the numbers from my field research team, right? I'm just screenshot from them. Right. So for those that are not aware, this snapshots I've given on this slide that we're showing very soon is actually on our stock BNB website under the Phillip the bank monthly update. You can see from the snapshot. Okay, so basically this is the DBS, OCBC, and UOB, the numbers, the new loans growth, credit costs, and the numbers itself. And bottom right will be the target price PB itself. Okay, target price below. This is as of mid-August. As of mid-August. Okay, I think let's take it over there. Okay, so bring in a bit more focus again. We go straight into one company, right? Specific one, UOB. Right, ROE sustaining at 14%, right? Looking to there's a target, right? So they are targeting to be the top trade bank in ASEAN, right? And then they managed to buy some of the different items that will help them to boost their growth in ASEAN, right? So they expect growth in the loans volume, right, and the fee income to offset decline in the margin, which is net interest margin, along with the interest rate cuts. Okay. So the pressure itself on the ASEAN exchange rate should also ease, basically because what it means is that they're trying to show that when US have very high interest rates, people actually want to put the money in US, right? So they are selling their own domestic currency, they are buying US dollar. So what we are seeing of recent is that the reverse of it, because they need to correct, they need to cover the trade, right? So instead of bringing through your local currency, you need to sell your US assets or sell the US dollar to get the money back to the local currency to repay the loans, because the exchange rate have been declining for the US dollar itself. Okay, of course, that's for the ASEAN as a whole. For Singapore, we do that, right, to a certain extent, but to a point of time, Singapore government might find that the Singapore dollar is too strong. The Singapore dollar might do the other way around also to try to weaken ourselves against the US, which is what I expect to be happening very soon, or at least by early next year. It was already at 1.30 currently, if you are following. US was around 1.34 earlier this year. I think was even at 1.336, I think. So 1.36 to 1.30, that's actually a 5% decline. So by just holding the currency, you earn 5%. You hold $1 over the US dollar. Okay. So this is the part to play. Exchange rate. So before I move to the next counter, I'll just talk about the longer term trend. This is the longer term trend. Right. The target price is on the top resistance, the total target price. Bottom is support level. So you want to do long and go short, it can be done. Right. There is basically some people are thinking that it might be a short-term decline. So the support level can be your entry price when it decline. Or if you want to really support hedge your positions, maybe you already have the UOB counter. You cannot sell already, right? You cannot net off. Instead of selling off, you can do a hedging. What later Jamie will share how to do a sharing of hedging the positions, right? To do a short position to cover the long position that you already hold. Okay. Wait for my next slide. Next slide is zooming further. This one a bit further, longer range from 22 to 24. This one I will focus numbers will be from right into a shorter time frame for UOB itself. Okay. Yeah. Okay, so you see over here, this one is the top part. And you see the top part will actually quite two double top in a sense. You see over here. One is 2022. One is as a recent this year, I think late July. Right? So you can see the two numbers near the top, and then basically I just draw a Fibonacci level. So my target levels actually do match the levels over there. So of course the all-time high itself will still be at around 33.2, 33.3 level for you. So that's the target level, right? The upside resistance. Now, do know is that even though we do have that wish list for this, we are going into the cutting rates, and that generally is supposed to be negative for banks. Right. So no matter how we are positive in the fee income and all that, short term there might be still swings on the downtrend direction for the banks in Singapore as well. We believe the Singapore banks do have the fundamentals to actually tide through all these swings, and we still are giving very high dividend yields compared to the overseas banks. Okay. Next slide will be on DBS. I think at the back can see already. All right, but let me turn on the screen again. Okay, so for DBS itself, we do expect that they have a very stable growth in the net interest income. All right, so we do have a few factors for it. First is the repricing of the fixed assets that we have. Second is the deployment of the deposit into a longer term tenor. So the longer term tenor meaning that they put their money in longer term investment instruments that earn higher income, higher interest or dividend. All right, compared to the short term ones that they are doing now. And the second one is that they do have a higher potential for loans growth recovery after the rate cut. Because right now, when the rate is so high, the loans itself might be a dry period. As well as we expect rate cut coming in, you will not loan now. You will loan later because you know the rate cut is coming in. So you want to loan later when the rate cut is already apparent or realized. Unless you do a floating rate loan right now, but most of the people will still wait for the materialization of the rate cut first before they loan. The private digital fee income still ongoing. All right, here the group net interest margin did drop, but the net interest income still increased, similar to UOB. The wealth management actually lead the thing. So just now I mentioned that the UOB bought Citi, some consolidation part that was for ASEAN. For DBS, they just bought Citi, but Citi Taiwan, right? So that also increased their AUM and AUC. The asset under their management to actually earn the fee income and also their assets for the wealth provision itself. And for DBS itself, they do have control over the credit costs and the SPS itself. They did perform quite well and I expect. So they have reduced their MPR a bit and the cost of the funds is lower. So even if they have a lower margin numbers from the interest rate cut, they can still earn more through the cost control itself. Okay, but do know that most of the people by the Citi, the part components, right? So even with the aim to cut costs within their original operations, there's an increase in the operating cost due to the staffing of the Citi component. itself as well. Right, the next slide will show the DBS chart itself. One, right, also along with your target price and the resistance on top and the support level below, should be showing anytime soon. Okay, so 38 to 38.2 and 39.5 is the two levels for the upside I'm looking at. So you compare that to the current level of 36, around 36.5 also, right? So that's going to be around 3 to 5% upside first, and then maybe the next one will be around 6% to 7% upside. And downtrend wise, I'm looking at a support of 35.3, 35.6, and 34. Right, so that's the levels that we're looking at currently. And looking at the chart itself, a downtrend back to the moving average first before a rebound might be more likely than the upwards trend for a short term. Right, I mean, along with the US market that's declined already, that we are seeing in terms of the general trend. And this is another way of looking at the chart that I've prepared to just show you in the short term how market is moving. So it was moving in a very nice trend line all the way up. You can see over there from 2024 for first half of the year to mid-year at least. Then they'll break down, right? So of course I never draw a channel down, but the breakdown I just moved the same length downwards to see whether or not in significant levels, how have you been moving in terms of the magnitude of the range of the trading. And you might see when I turn it on again is that the range that the counter move within the trading zones of each time period is quite nicely within one half of each of the breadth of the stock itself. Okay. Give me a moment. All right. So if let's say the magnitude of the range of each particular channel that I drew, right, they are more significant to the point of the half distance. Then that's why I put the green and the red boxes there. Well, those are the points that the counter might be moving, and that actually coincides with the support and resistance level as well for the counter. If you are trading on this itself for either entry for support, or you're looking to do a short sell and then you're looking to buy back the different levels as well. Okay, next we do have the Singapore Telecom, Singtel. All right, so they have a new launch in terms of their counter, the bandwidth itself. So they do want to aim for wider coverage in reduce in congestions itself for speeds, but also mean higher cost for them in terms of operation. Right, so they did have a better improvement in terms of their ARPU, and then they also did better for their the different revenue source, right, for the roaming revenue. Right, so the main thing in Singapore is that we do have a lot of disruptors, new company and everything, but we have less. I think there's trying to fix something. Sorry for the disruption. First, I think they changed the projector behind for the main area. So I think for the clients that is not the projector, give some space for the people to change the projector first. So, yep. Maybe at this point of time, since we're doing a short break while we're trying to fix the projector itself, maybe for toilet break as well, for those that is a toilet break, or take some water from the back itself. And someone, not a lot, right? Yeah, actually, those are at the back and inside the screen is on. It's just this main screen. So the Zoom is not affected. The YouTube is not affected. Oh, it's true, it's true, Zoom, it's true, Zoom. Yeah, right. Yeah. No. Sometimes, each user got different components. Maybe you only use phone, maybe you use phone plus maybe use phone plus something else. So each user we count per user basis. Then revenue increase up. Average revenue per person. So basically, the more you subscribe, the more you are going to pay per month for everything you do. This is what they want. They want you to be taking more services from one shot. These are the basically the virtual. Yeah. Hello. Uh, mute button. Oh, mute something. Hello. Okay. No, that's not Zoom. Zoom is here. Oh, not here. It mute the. Okay, okay. All right, thanks everyone for waiting. I think we can resume. And we do have a alternative projector now set up. Should be more consistent. Right? Okay. So Kara, those are the back can see clearly, right? Okay. Okay, so next we do have Singtel, which I mentioned already. So okay, just now someone mentioned what is ARPU. Basically, this is the average revenue per user for the company. Right. So basically, you want to increase your revenue per user basis, meaning one person subscribe to multiple services across the telecom, right? Meaning that you have more stickiness and you have more revenue per user, and then likely to stay longer as well. Okay. Okay, then we also have earnings growth will be driven mainly by the cost savings as well as the higher mobile prices. And if you do follow right now, I think recently there will be a new launch for the iPhone. And the iPhone that is coming out itself is promised to have better compatibility with the new service that they will do for AI. and that might actually lead to more people to change to iPhones. But I think the past iPhones have been doing quite well to use multiple years. But the new AI service need at least iPhone 15. So at least from last year. So if you bought before last year for iPhone, that most likely you want to maintain using, if your phone is still using, still maintaining very well. This new service does incentivize more people to consider changing for a newer iPhone coming up this year. Okay. So then now new growth driver will be more for the AI side and the cloud computing, right? So the Paragon, right? Not the Paragon for shopping, but the Paragon for Singtel, and GPU as a service for them as well. Okay, so basically this is the chart for Singtel, right? The level I was showing there, 3.3 to 3.25, 3.44, 2.953, and 2.8 for the support itself. All right. So you can see right now they already broke. Okay, so basically what I drew here is that I drew a from I think the 2022 COVID period, I think October it was, right, up to the 2022 high, and then down back to the recent low in 2023 end of the year. And then I project upwards, and you can see that technically right now the recent outperformance have already overshot the same range of uptrend right now. So now we're going to step into unknown territory if the Singtel do continue to trend. Of course, even though we're seeing that it's a very high compared to the front part looks like, but it was actually falling off from $4+ that we do actually know Singtel was in before 2020. Okay, so right now just a recovery of the counter in terms of the price performance. Q sets not many points involved, right? I think you can read more points on our research analyst part, but personally, I think sets is not as going to be a popular demand, even though tourist numbers is good, because they are not going to totally capture all the increase in revenue, all the competition involved. All right, but basically they expect higher, not by tourist arrival, you can see as well. The main increase that they're looking at is the cargo numbers for sets itself and the food rates itself, which is what they want to do, and then the benefits that they have been reaping from the acquisitions of the WFS, right? So that is the main thing, and then they're looking to be so-called in benefit of the increase in e-commerce demand. So that's the one, right? So the issue of the e-commerce demand is that there might be a spillover due to the geopolitical tensions. So just now I mentioned that when the geopolitical tensions, you might have a supply chain issue. Then you might find alternative route of supply chains, and that might also mean that some of the people that have goods that was previously shipped through the freight or through your shipping the actual ships itself, right? It might not be in time due to a delay in the shipping routes. So they may move into through the air freight instead. This is why they can get more revenue potentially through a spillover effect. Okay, but the spillover effect mostly, I think they are saying is that looks to be priced in currently already. So you're looking to see any upside from this, it may not be totally shown because most people already know about this issue. Okay, so same thing, sets your resistance level and support levels, right? There's a share. And the upside, you can see this, I call it these Fibonacci levels. All right. So you can coincide quite well with the different levels that we are seeing. And right now, generically, it has already been a very big uptrend. And right now, you see the current level around there. This resistance level at where it is right now is actually quite near to the previous support level of the previous zone time gain itself. Right. So that likelihood might act as a stronger resistance currently for this level. Okay. Okay, next we have ST Engineering, right? So one last few I'll be covering. So first is the first half of the commercial aerospace is very strong in the performance for ST. All right. Then the weaker margins due to the three different mentioned there. So low margin PTF, basically passenger to fleet conversion, meaning conversion of certain this aircraft is on that for usage, right? So they earn lower margins, but they still earn good income from there. Right, rising labor costs as well as spare part challenges, meaning the increase in costs for themselves to operate, right? But they do have a stronger earning expectation overall due to the higher, this greater operating leverage in ratio in terms of the demand in the commercial aerospace region, and as well as product sales in defense itself. Okay, so MRO, I broke down already, maintenance, repair, overhaul, operations. That is the main revenue source on continuing. Instead of just earning from the sale itself, you are earning from the services they provide. That is actually one of the one, it's more sustainable for long term as well. Okay. Okay, same thing, you have support and resistance level. So for ST engineering, I think for blue chip wise, it has always been popular. First is government related. Second, there's strong dividend. Third, the price performance has been quite consistent. I think one of the few that did not really disappoint you, right? Even Singtel disappoint people sometimes here and there, right? So I think ST one of the few, ST and DBS, these two, right? The simple thing that everyone rely on, right? I think if you are a very simple investor, want to buy only two company, I'll recommend these two. But if you want to buy more, you can buy STI ETF. If you want to buy even more, you can go break down all that I mentioned. Right? But basically the idea is that ST one of the strong choice I have since I ever joined this company itself as well. Okay, so I will move the part to the next speaker, Jamie from Macquarie. She'll be sharing more on how you can do hedging and leverage yourself if you do have a very strong opinion on the direction itself. And so let's put our hands together to welcome Jamie.
So before I get started, I just want a show of hands. How many of us here are shareholders of DBS? UOB, OCBC, SIA, ST Engineering? Okay, quite a bit. SETS has been rallying like crazy. So only one. Intend to get out soon? Not yet? Are you a bit worried that it looks a bit toppish? Okay, so well, if you are, you know, this gentleman is not, but if you're one of those who are a little bit worried, why? Because do you know that September traditionally is one of the worst months for global equities? Meaning your stocks, your DBS, your sets, they could be on a longer term momentum, but they're not spared from the sell down. So if this is part 3 of a 3-part series we've been doing since July. So those who have been following us, I hope you did use some put warrants, right? When ahead of NVIDIA's results earnings, when the Nikkei tumbled 12% in a day. Well, if you didn't use put warrants, then I hope you were informed to at least use a call warrant to jump on the 10% rebound the next day because you have made 200%. Okay, but today we're not talking about Japan. We're focusing on Sing stocks because that's what most of you are here for. So let's have a look at how we can use warrants to either still, you know, try to squeeze some gains out of the upside, even if we're not current shareholders and we think we want to get in, but we're a bit worried about the longer term momentum, right? Because September is a poor month. Or those of us who are sitting here thinking, yes, September is a poor month. How can I negate the share price drop on my portfolio while staying long in the long haul, but hedging in this month of September? So good evening, ladies and gentlemen. My name is Jamie, and I head up the Singapore Warrants team in Singapore. And I'm here today to tell you about how you can use warrants to make more money in today's market. So what exactly are warrants? Okay, and why even use them? Now, to explain that, I'll tell you very briefly the 2 types of warrants before looking at examples on why you want to consider them. There are essentially 2 types of warrants, a call and a put warrant. Okay, a call warrant gives you the right to buy the shares at a strike price on expiry date, and they generally increase in price if the tracked shares or index goes up. Okay, so it mimics the behavior of the underlying. The put warrant, on the other hand, gives you the right to sell the underlying share or index at the strike price on expiry. And so it moves in opposite direction from the share price. Okay, meaning it goes up in price when the share price goes down, which means if you're worried or you want to hedge, you probably want to consider a put warrant. Now, at this point, those of us who are familiar with options, do you find that it sounds exactly like an option? Yes? Yet it's not. Warrants are a form of options, but they differ in 2 big ways. One, warrants are exchange traded. They are listed on the SGX, so they are a form of a security. Now, with securities, can you short sell? Can you short sell? No, you can't. You can make a short sell during the day, but you have to cover it. Otherwise, you get subject to the buy market, correct? But with options, they're either over the counter or as much as they're exchange traded, they allow you to short sell to earn a premium. But what's the catch? We're able to short sell. Potentially your downside is unlimited. Huh? Whereas the maximum you can hold on any security listed on SGX is what? The whole amount that you have placed, right? Which sounds really scary, but I'll tell you in a quick bit why it's not so scary for warrants. Because even if you lost the entire amount in a warrant, it could be less than your unrealized losses on the stock. Okay, I'll tell you why very quickly. How do you recognize a warrant on the market? They are named just like options, but the special difference is that they're identified by a 4-digit alphanumeric code. So the first warrant here, they always track the underlying name. The first warrant here would therefore be a S&P warrant. And then the second one at the bottom is a DBS warrant. That's followed by a strike price for index warrants. So like the S&P has got a strike price, but for stock warrants, they don't have a strike price that's embedded in the warrant name. Okay, that's for next. We have got the issuer code. In this case, Macquarie Bank, we're the only warrant issuer in Singapore. So that's the only code you need to know. Followed by the 3 very important letters. Okay, one ECW, which stands for call warrant. So if you are long, you're bullish, you look for a call warrant. But if you're bearish, what will you look for? A EPW. So that's important, yeah? And then that's followed by 6 digits, which stands for the expiry date of a warrant. Now, warrants are not like shares. If you're bullish and you think DBS is going up to $50 in 10 years' time, please stick to buying DBS shares. But if you think in the short term, it could go to $38 or $39.50 as Huan has pointed out on the technical charts, right? Then potentially you want to use a warrant because they expire, but they give you the leverage that you need in the short term. Having said that, it's not something you can hold on to forever. You shouldn't even hold the expiry date. And if you wanted to identify what the expiry date is, it's the expiry date here is in a year, month, date format. Okay, so the first warrant here expires when? Anyone? 20th December. This DBS put warrant expires when? 7th of March next year. If the name sounds very scary to you already, don't worry. When you select a warrant to trade, you actually don't even need to bother about the name. This is just me telling you how you can recognize the warrant name. Essentially, warrants go by the 4-digit alphanumeric digit code. And this is the code you type into your trading systems on PoEMs. Okay, if you're interested in this warrant, it's MZAW. If you want to find out more about the warrants, about the expiry, about the strike and all that, you actually also only need this code on our warrants website in order to find out information. So I'm just telling you how the name works, and also maybe because it can come out in the Kahoots quiz later for you to win a prize with, but just for information. They also have got a warrants per share and conversion ratio, but that's not really important if you're not holding it to expiry. Next slide, please. Now, more importantly, why do we want to find out about this products? Why do we, even take time to find out how to read the warrant name? Really, because all that matters is it has the ability to make us money. How much money can it make us? Well, let's have a look at some of these examples. We're talking about in the third quarter. Let's have a look at how we've done quarter to date, shall we? Okay, so some of the top performers in the market, has been SETS, Singtel, SGX. Now, during this period, SETS has gone up a really astounding 27%, 26.7%. However, if you have bought in any of the 2 sets call warrants available in the market during this period, you have made, ladies and gentlemen, 218% for the first warrant that went from 2.8 cents at the point if you had bought it to 8.9 cents yesterday. And the second warrant here, you have made 270%. What does that mean? This means that these warrants have moved up between 8 to 10 times more than SET shares. Okay, let's have a look at Singtel. Singtel is up 13.8% during this period. How much did the call warrant go up by? This one call warrant here went up 125% from 2.8 cents to yesterday 6.3 cents, 9 times more than Singtel shares during this period. And finally, SGX call warrants, how do we do? It performs similar to Singtel shares during this period. SGX, potentially because, it's been quite a volatile quarter, a lot of trading activities on the Singapore exchange. And this call warrant here went up 7.6 times more than SGX shares. It went up 105%. And how did the put warrant perform? It went down because the stock was up, and so it went down. Almost 100% loss, but 36%. So what I'm trying to say here, I'm trying to say this is why people want to look at warrants, because of its ability to magnify it, because of its gearing levels, different form of gearing levels. So that's up to you. because instead of enjoying 27%, which is fantastic for the gentleman who said his long set shares, fantastic, but if you had bought a warrant, you would have made more than 200% and you have gladly exited, because you don't need to wait till the shares go up 200%, right? In many years from now. And you have done that all within less than 3 months. Now, what is very nice geared gains, and what's the maximum loss here? In this case, this put warrant nearly went to zero, right? It's at the minimum 0.1%. And so, your upside is unlimited and your downside is capped at 100%. Now, earlier I said, why is it so bad? Why is it not so bad, even if you lost 100%? Why? Because look at how much the warrant cost you, even if it was 100% loss. It cost you 2.7 cents. So having lost close to 100% or 100%, it can sometimes be less than the unrealized losses that you are seeing on your portfolio. Again, I'll show you an example of why that would truly be the case, because you would not invest in warrants as much as you invest in shares because of the gearing ability. Now, a lot of Singaporeans don't know how to use put warrants or options enough. They don't know how to protect their portfolios. But you've heard of insurance, right? Insurance policies. And I think most of us here are insured. So why are we not insured in the stock market? Whenever you've got the Fed coming up, and we know these days it's not guaranteed, right? Fed according to what we expect, drops rates, we sell off anyway. Sometimes they raise rates and we're puzzled, but it gains anyway, right? It's quite unpredictable. Even for earnings, as we know. Sometimes, companies outperform, but the market sells it down anyway. What's a classic example? Any of you? NVIDIA, yeah. Fantastic quarter, just not as fantastic as before. So what does the market do? Sell it down and lose billions in market cap. So what can we do? And we know these things are fixed. Earnings, we know about the war, we know about sudden news reports. You turn on CNA, crises. You hear about sudden company-specific announcements, right? Contracts being fulfilled or contracts not being fulfilled. We hear about lawsuits. We know about general market, volatility ahead of elections, right? Well, even though it's in the US, the global markets get affected. We know about China data coming out, potentially surpassing or underperforming. And all these things move markets in short term. And we don't always know in what direction. And this is where we can use a put a warrant. Or simply, sometimes technical analysts like, Huan, still a good story, but if the whole market is looking at the same resistance, there will be some sell-off there, right? In the resistance levels, because traders will be coming in. And what can you do? In this case, in July, we saw the Singapore banks rally to very new recent records. And for some people, it was a little bit worrying because it was reaching the resistance levels that traders were calling. So what could you have done in during that period? Well, if you had considered put warrants here, 15th of July was pretty much where it peaked, right? And it was leading up to earnings season for all three banks, DBS being the last to report. I think it started with OCBC and UOB around 1st, 2nd August, followed by DBS on 8th of August. Now, what happens if you had bought a put warrant during this period? Well, these shares truly did come off. Okay, it was a pullback of about 12% for DBS. These two put warrants that were available cost between 3.7 cents to 7.7 cents, and they went up between 8 times to 14 times more than the shares. So if you were a shareholder, and so many of you here will raise your hands up as being, as indicating that you are shareholders of the Sing banks. Well, during these scenarios, you could have more than protected your portfolio and cushioned that 12% loss with a 96% to 165% gain on the puts. If you had bought the OCBC and UOB put warrants, they would have gone up between 8 to 13 times more than the share price fall. So it would have cushioned your losses. Now, if we're a bit convinced, we're a bit more convinced about why we should look at warrants, I think let's proceed to find out a bit more, shall we? So, all in all, why do we look at it? Because through here, we can now use it to hedge the downside. But more importantly, even if you lost, all of your investment, which you shouldn't if you don't hold it to expiry, the loss is only capped at the small capital outlay. Because look at the price of the warrants. You've got your OCBC 15.30, you've got your DBS UB $33, you've got DBS $38, and these warrants cost 2.8 cents to about 8.5 cents. Okay, so very small capital outlay. So how can we be selecting a warrant if we were interested to trade? Essentially, we narrow it down to 4 steps. And at the end of the day, the most important thing is this: your target entry, exit, and cut loss levels. The same views you have when you trade any shares, and which you should have if you trade any shares. Right? Some people, they like to hold on to, wherever they think the sky is the limit. But, the truth is there are so many people out there doing technical analysis, so many, and it can look very good, but there are a lot of people wanting to take profits, right? Like in NVIDIA shares and all that. It could continue to go up in the long run. But, if you don't have a target exit level, it can be dangerous because the gains you're meant to capture, you would actually lose them all, right? If sentiments change and all that. So target exit levels are important. And once they reach, you have to exit. You have to, especially with warrants, and I'll show you why later. But just as importantly, if the views don't realize, this being a short-term instrument, you have to learn to cut your losses. And likewise for any short-term trades, whether it's a ETF, unit trust, mutual fund, or the direct shares itself. And this is especially important when you do it with warrants. But you mainly need to have the view on the stock, not the warrant, okay? The warrant is just an instrument to track the share. So your entry, exit, cut loss level should be on the stock itself. Step 2, there needs to be a holding period. You're buying the warrant for a reason, either to hedge, impending volatility, or you're just riding it, to go up to resistant levels potentially. Because like I said, if you had a long-term view, you think DBS is going to $50, what should you do? You buy the shares, enjoy your dividends, right? Hold it forever. But you don't do the same with warrants because they expire. They're just like your bento boxes, like your bread. They expire. You have to exit, okay? You have to finish consuming the benefits of it. All right, so the holding period is very important. But how long? How long to hold for? That I'll show you in a quick bit. Number 3, there's the effective gearing level. What is that? That's the ability of the warrant to make bigger, more magnified moves compared to the underlying. So just now you saw, sets going up 27%, the warrants going up by 200%. Well, they move about 10 times more. Some have moved 7 times more. Some have moved 10 times, 9 times more. That is gearing. How many times more does it move relative to the underlying it tracks? And finally, you should always look for a warrant that trades on tight spreads. You should always trade anything on tight spreads because why not? It's the most cost effective, right? If you go to a money changer, you always want to look for someone with a tighter spreads, not someone with big elephant spreads, okay? And with that, I will quickly show you the tools you can use. We need the website. We need to look at the tools we can use to look for a warrant, okay? So the website to visit is warrants.com.sg. And I basically came out with some of the tools, like the warrant selector, really to address investors who a long time ago said to me that they were struggling to select a warrant based on these 4 steps. Okay, so to find the warrant selector tool, you go to the warrant tools drop down, and then the second drop down there, selector. And this essentially summarizes the 4 steps for you that I've just talked about. First, pick an underlying of choice. Is there anyone with a view on the underlying of choice? Anyone? Do you all take notes based on Huan's levels? I saw some people snipping pictures. The rest never, right? Luckily for you, I took notes for you. So okay, we'll do a show of hands. Anyone wants to look at DBS? DBS? Okay, we'll do it for the one gentleman. DBS, because once this is, if it's 2 shares, then you narrow down as DBS and SC Engineering, right? So let's have a look. Are you bullish or bearish, sir? Bullish. So where do you think it's going? Once this is, the resistance you should look out for is $38, which it was at around July, and $39.50, right? So if that's the case, we're bullish, we click on call, and then it will take us down all the way to this table here. Can we expand it more? Okay, if you can't see. All right, so remember what I said, target, entry, and exit, right? So if entry is now, so that's the large price, 36.65. This gives us the current warrant price. Now we need to have the exit. So maybe 39.50 because that's a resistance that Huan talked about to be a bit wary of. That's 7.8% higher from where we are. Now let's have a look at how the DBS call warrants, 3 of them here, they are traded on tight spreads currently. So I've already done step 4 for you. 3 warrants are tight spreads. We increase the number of weeks here to see how the warrants will perform based on this view. And if you can't see from the back, I'll just tell you, if a week from now, DBS went up by 7.8%, the 3 warrants will grow between 41% to 111%. Okay? And if it went up 2 weeks from now, the gains will now soften to 40% to 105%. Some of you have been here for 3 times now. Do you want to explain to everyone why this is the case? Hunter, if we keep increasing it, you see that the gains will drop. Why is that? Still leverage, still geared gains, still more than the DBS gains, but why have they decreased? Anyone? Oh, very good. Who is that? Excellent. Time decay. Now, every financial product, okay, that offers you leverage will have a holding cost. In the case of warrants and options, it is known as time decay, meaning with time, the warrant value will decay. But what's important to note is that as long as your view is right, okay, is moving in your favor, the geared returns will more than offset the time decay. So even 12 weeks from now, you see that the warrants will grow between around 30 to 33%. All right, that's about 4 times more than the underlying. But obviously, if it takes shorter to reach, say 8 weeks, if we do 8 weeks, it will now grow between 35 to 68%. So it will grow 9 times, about 8 times, 9 times more. Okay, so the shorter, in essence, the shorter the underlying takes, the shorter for your view to be right, the more gearing you enjoy. The longer the view takes for you to be right, the less gearing you enjoy. Now, what is the maximum? The maximum is whenever you increase the number of weeks to the point where it no longer makes you geared returns. So using this example again, this tool only gives a maximum of 12 weeks. If we were keen on, say, the first warrant here, okay, 33%. How long can we afford to hold on to this warrant for before we need to exit, before we lose money? Now, if that is not available here, because by 12 weeks, it's still making you 33% gains, we have another tool called the calculator tool that tells you exactly, or rather, I should say, approximately what date you can hold on to this for. So the calculator tool is available at the Warrant Tools drop down again, and here you click into the calculator. How does this differ from the selector? This one requires you to know the code. It requires you to know exactly which warrant you are looking at. In this case, the first warrant was IESW that we saw on the selector. Okay, we click IESW, yep. That's the one, let's click on it. Okay, scroll down and you will get to see the calculator tool. Scroll down. Okay, so you've got target entry variables, which you keep unchanged because that's when you're looking to enter, for example. Maybe we move the date to tomorrow, on the left. 6. Okay, and then our target is 39.50. Okay, and then we saw 12 weeks from now, so that's about 3 months from now. So we move it about 3 months, so that's around December. If you scroll further down, we move down so we can see the warrant price. Yeah, you will see that it moves up about 27%, okay, for a DBS 8% increase. Now we keep increasing it to see how the percentage drops, and we keep increasing it. Okay, it's too much. We go to the end of January, probably. Yeah, up to this point, around the end of January, you will see that the gearing in the warrant, there is not much left. Do you see it? Again, what's the reason? Time decay. Because a lot of time has passed since then. It's basically about 4.5 months, right? So in 4.5 months' time, if your view was that DBS was going to go up to 39.50, you have to exit from this warrant. You have to exit from this warrant, okay? Because if you hold beyond this, you're not going to make many money, even if the shares increase. In fact, if we move this more, Huan, can we move this to February? More? You see? On Valentine's Day next year, basically, if you hold it for about 5 months, this warrant will now be in the red, even if DBS went up 8%. So why do some people lose money even if their money is right? Because even if their view is right, because they've held it for too long, such that the time decay has offset their gains. Okay, so it's important why we say step 2, have a holding period. And if you have no idea, you need to notice your maximum. So what happens if your target price is not met, 4.5 months from now? What do? Exit, cut your losses. It's okay. It sounds like a lot, right? So in this case, we go up. Let's say in the worst case scenario, we move up. TBS stays unchanged, right? And then we said the maximum we can hold on to this for is until 22nd of January, I believe. 22nd of January, yeah, it would have made gains, right? Still more gains than DBS's 8% move. In this case, it's down 48%. It sounds like a lot. Sounds like my loss in my China portfolio since 2021. But it's okay. You only put in 8.1 cents at the point that you bought. This is not so bad at all, right? Okay, so this is a DBS warrant and how you can use the selector and the calculator tool. Now let's have a look at another underlying, going back to the selector. Anyone keen to see how a put warrant will work? So what shares do you want to look at? OCBC, UOB? Anyone? So why don't we have a look at UOB? Any UOB investors here? UOB, let's have a look at UOB. Okay, we're worried about the pullback in the short term. There are support levels at 2 levels, essentially $30.40 and then $29.50. So where are we now in terms of the share price? 31.70. 30.40 actually isn't so far away from here. So let's maybe project $29. 29. That's 8.6% drop from here. I mean, which is a little bit scary, but this is exactly how much it came down by in July, right? Okay, and then how would this put warrant perform? There's only one put warrant here if we wanted to use it to hedge. Okay, we continue to increase the number of weeks. Same method of using it regardless of underlying. We keep increasing it and we'll see if by the end of September and then October, they also say Black October, right? So in 2 months' time, well, in 3 months' time, it's still going to go up by 42%, which will be good, I guess, to hedge against. But if by the end of October, we think, okay, the worst is over, or maybe you're still worried about elections, but you want to get out already and reassess, you can take your profits at about 64% with an 8.6% drop. Of course, in a positive scenario where UOB continues to go up, right, and it doesn't come down to what you're expecting or the nearest support level, what do? You bought this put warrant. UOB continues to go up. Yeah, you cut loss. Why? Because it's only bought as a hedge or insurance, right? Yeah, so you again cut your losses, right? And then you reassess and you really buy it for really the worst case. It's just like insurance. You buy it for the worst case scenario, such that when it really happens, you can hedge against the big loss. But in the longer run, if it's all good, smooth sailing, it goes up, you're happy because you continue to enjoy your dividends and your share price gains during the period, okay? I just want to quickly use Singtel perhaps, because Singtel has been really bullish for a long time. In fact, this year is looking really good. And it's so rare to find a telecom utility stock moving so much, right? And some of us are sitting here thinking, okay, so I missed out on the rally, or I'm a holder. I feel like I want to exit, okay, because it looks really good at this point. I'm already up like over 20% this year. But what if it continues to go up a little bit more, right? What can you do? You can technically sell out your Singtel shares, take your profits, but if you want to continue to ride on the positive momentum, the short-term bullish momentum, you can consider using a call warrant. And that's how some people use the call warrant, right? They take their profits and then they think, such a waste, I think it's still going up. You can use a call warrant to continue to ride the short-term bullishness. Now, if we're bullish, we'll click on the call, and then right now is 314. The nearest resistance is 330 to say 340 or 344. Okay, and that is another 8% from here. So sometimes as shareholders, we think, okay, don't be greedy. We cut loss before resistance, right? But you think, okay, what if it truly goes up another 8%? Same steps, increase the number of weeks to find out the maximum holding period of this warrant and its simulated returns. So you can see 12 weeks from now, you will still gain 29%, which is about, just 2.5 times more than the shares. But still, that's 29% returns rather than an 8% return. At what price? 1.4 cents only, right? So this is gearing in effect. This is how gearing works in warrants. And this is how you can use the selector tool to select a warrant based on your target entry and exit and cut loss level. Find out what your holding period is. And don't worry, all these warrants listed here that are featured here are all on tight spreads. So that's step 4. And then step 3, gearing. We can see how the gearing differs with time and based on your target exit levels. Okay, so this selector tool covers all 4 steps in selecting a warrant. And that's why we call it the selector, so that you can from there choose a warrant to trade and know the expected returns. Okay, we go back to the slides. So again, this is warrants.com.sg. And I believe you probably want to already open it on your phone because the Kahoots game later will probably require you to use the website. Okay, slides. So we understand that a lot of people like shortcuts, which is why when selecting a warrant on our warrant search tool, we do have these fire logos to mark out the warrants with the tightest spreads and highest liquidity for people who just want to easily look for a warrant. But of course, there could be a warrant that's more suited for you, that you prefer that's not on the fire logo. Next slide, please. Next slide. Next. Here is the warrant search tool. It tells you the last trading date as well. Now, I've mentioned this before. Warrants have got an expiry date, but you should never hold the warrant to expiry date. Why do people like to hold things to the end? Because their views are wrong, right? So they think it's okay, I'll just hold to the end. Maybe there's a chance I'll make back more money, but usually the delta or the probability is 0. So we always say at least get out with small amounts of capital that you can redeem back, right? Sell it at a loss, then have 100% loss. So, the selector tool, the calculator tool tells you exactly when you should hold it until. So please follow that and don't hold the expiry date. But if you really want to, just know that the last trading date is in fact the 5th business day before expiry. And this is according to SGX regulations. Why? Because we need to provide for those who accidentally short sell the warrant on the last day. They need to be subject to the buy-in market, okay? And then at expiry, the warrants are all automatically exercised, whereby if they have got value at expiry, we'll mail it back to you. But just note, the value at expiry is almost always lower than if you sold it back before expiry. Why? Because time value is 0 at expiry. There is some time value before expiry. So your warrant value will be higher, okay? And then 2, they're cash settled. If it expired out of the money or without value, you don't have to pay us back anything. With options, you're going to take delivery of the shares, right? If you're wrong. And then what? If the stock continue to go down, you have further in the red. But with warrants, they're all cash settled, meaning the maximum loss you sit on is really just however much you placed up front, you bought, okay? And you lost that. You don't have to pay us back anything, beyond the expiry, okay? How much money should you be placing into a warrant? Well, we like to use the effective gearing as a good gauge. Why? If the stock moves 6.8 times more than the shares, if you place the full amount, okay, so I give you an example. You were holding on to $100,000 worth of DBS shares, right? Then after this seminar, you think, okay, I'm a little bit, kanchong about the month of September. I probably want to hedge a little bit. Now this warrant is 7.8 cents, and you're thinking, okay, how much should I invest? The answer should not be that you invest the full $100,000, the same amount that you're holding in DBS shares, into this warrant. Why? Because it's going to move 6.8 times more. Okay, and if it moves 6.8 times more, you put $100,000, you are now betting that DBS shares will go down, so that you make a lot of money when it goes down. So how much should you invest? You should be investing 6.8 times less, okay, which is the effective gearing amount. 6.8 times less. In this case, you will only invest $12,800 to protect your $100,000 worth of DBS shares. In how many units do you buy? You use this $12,800 divided by the cost of the warrant to get around 165,000 units. This means you go to your Warrants platform, you look up this warrant code NZAW, and then you just transact like how you buy shares, buy 165,000 at 7.8 cents. So this you can use to hedge your DBS portfolio of shares in the short term. And know that when DBS shares go down by 1%, the warrant will go up by approximately 6.8 cents. To observe how the warrants perform during the day, or if you just wanted to find out, you're just curious how do Singtel warrants move according to Singtel shares during the day, we have another tool called the Live Matrix, which tells you exactly where the warrant is based on where the underlying is. Remember what I said, you literally don't need to know anything about how the warrant moves. You just, or rather, you don't need to exit because you think, I need to do technical analysis on the warrant to know my exit. No, your view should be based on underlying, right? So if during the day you think you want to exit when DBS is at 36.65 in this warrant, that's your target exit level. What price will it be? What price do you enter on the warrant to exit? Look at the line matrix. You've got the bid here, 36.65 on the stock. Look across the row and you'll see that the warrant bid price is 8.3 cents. And then again, you can just put the limit order on your poem screen to limit sell at 8.3 cents. What if you wanted to enter only if it's maybe decisively broken above a support level, right? For example, at 36.64, you think you only want to enter then. What warrant price should you enter? You just again look up this warrant matrix, go to the offer of the DBS shares, 36.64, look across. The warrant will be quoted at 8.3 cents offer. Okay, and then you basically enter as you would enter a buy order on a share at 8.3 cents in this warrant. Okay, that's the live matrix. If you still don't understand, I'll give you my hotline after this seminar. Just call. I often have a lot, and I'm even talking about your remisiers. They a bit lazy, they just want to call. Like, phone banking, right? We like to just call, right? Ask you to do the automated, please cancel my fee, just call. Myself and my colleagues will help tell you exactly what the warrant price will be, okay, based on your view. Okay, this live matrix also is very cool. It tells you another thing. It tells you whether the warrant is on tight spreads. So anything that's got, a spread of less than 0.2 of a cent, okay, this is tight. If right now the bid says 8.1 and the offer says 10 cents is wide, okay? So avoid anything on wide because it's just not cost effective for you. All right, next. This is the warrant search page I told you about before. You can look out for the fire logo for a quick selection of which warrant you might want to look at. It's the same warrant that your TRs, your remisiers will tell you if you ask them about warrants because, they've been through the same seminar. Next slide. Okay, every product comes with risks. So I mentioned them. Gearing works both ways. You've seen how the SGX call warrant went up by, was it 120%? And then the put warrant was almost just 100% loss. So gearing works both ways. Bear in mind, you can lose your maximum, whatever you put up front. But honestly, if you don't hold it to expiry or very close to expiry, you'll never lose 100% of your money, okay? So don't hold it to expiry. Now, they have limited life. Please consume the benefits. Don't hold it to expiry. And then when it's moldy, then you're like, oh, I didn't get anything back, right? Lost everything. Don't do that. We also have warrants that track foreign underlyings, like your Hang Seng, like your Nikkei, like your US indices. So if you're interested in that, we also have warrants. But note that the FX, so all warrants trade in Singapore dollars, right? This foreign underlyings trade in foreign currency. So there's a bit of a FX changes that can affect the warrant price. Okay, next. How does it compare to other leverage products that you might have heard of, in these seminars? Now, warrants are a form of options, like I said. So a lot of features apply, a lot of unique features like time decay, implied volatility changes, etc. To find out a little bit more about it, I would ask that you attend one of our warrant advanced warrant seminars in our office. Or you can look at our, 1-minute videos on the way home later that explains that to you. But essentially, we're the only product that's tracking the underlying futures, stocks, and indices. So we're not following, something that's been constructed, to mimic. We're not, like ETFs, they mimic the moves of the underlying. We follow the actual underlying. So when the underlying is open, like Hang Seng, tomorrow, I heard there's typhoon, so it will be closed. Our warrants will not have quotes because the underlying is closed. So we are following DBS shares directly, which is why we encourage you to look at the line matrix. We encourage you to have a view on underlying and to enter and exit based on your view on underlying, not the warrant. You only use a warrant as a means to an end, as a means to have leverage returns based on your view. Okay. And then we don't have fixed leverage factors. You have seen how some warrants grow 2 times more because you've held it for a long time. Some warrants have gone up 20 times more in the examples of, this quarter. So the more the stock moves in your favor, the more gearing you will enjoy. Okay, so we have anything from 2 to 20 times, 30 times more. So from different risk profiles and for different views, really. Okay, and we don't have other unique features like, you've heard maybe DLCs, they sound very similar, but we don't have compounding and airbag, etc. Okay, next slide, please. How can you trade warrants? You first need to be SIP qualified. To find out if you're SIP qualified, actually, it's very simple. If you've traded ETFs, structured notes, futures in the last 3 years, you are automatically qualified. If you've got finance experience or you had a finance degree, you're automatically qualified as well. Otherwise, please speak to Ramaisia on how you can be qualified. Essentially, requires you to take a test online. This is mandated by the MAS. Next. Those of you who want to know a bit more about warrants on your way home, we've got 1-minute videos. Why are they 1 minute? Less than 1 minute, because we know that everyone is, doesn't have much time these days. You like to just swipe. So we've got that in less than 1 minute. We're trying to make it fun. So hopefully that's something you can look at on the way home. For all information on warrants, please go to warrants.com.sg. And we currently have a promotion with Phillip, whereby as long as you place one buy trade of minimum $3,000, you get $88 cash back. Okay, and I think this is all the way to the year end. They'll extend this. The other thing we can offer you is, how people buy on the offer price? Typically, that's where you buy. We are offering warrants on the bid price. So if you want a slight discount, call us up on our hotline. What's the hotline? It's available at warrants.com.sg. And let me know the warrants that you're interested in to buy on a bid, and then we will hit you. Okay, and finally, I think we've come to the end of this. And my colleague there is giving away really pretty disposable bags for you to shop at the grocers. You just need to follow us on either Telegram, Facebook, and the newsletter. So it's behind. And with that, I think we come to the Kahoot session.
First one, I think we slightly exceeded our time, but we'll just do a short Q&A. Right, so if you have any more questions beyond the Q&A time that we have, right, you can feel free to contact our colleague, or you can actually send us through email, and we will answer your inquiries as well. So I think there's one question just now from this gentleman. Yeah. Okay, so you can't compare warrant and option directly, but let me just.
We don't have it here. So actually, if you follow us on Telegram, there will be a post on this, but it's a favorite question. How are they different? I think most importantly, options do not have a issuer. They don't have a market maker. Now with warrants, we are there as an issuer and market maker. What does that mean? It means that we are always there on the bid and offer with prices and liquidity for you. For the ease of entering and exiting the trade, we are always there. The second most important difference is with options, you can short sell it, right? To earn premiums, right? Because you're doing certain strategies. So what this means, but for warrants, they are long only. If you're bullish, you long a call. If you're bearish, you long a put. You can't short a call when you're bearish, and you can't short a put if you're bullish. Why? Because on the SGX, just like shares, they're a form of security, you can't short sell overnight. So that's an important difference, right? And because of this, therefore with warrants, your maximum loss is always only capped at 100%. Once you can short sell anything, your loss is always infinite. And then finally, it's a security product. You can trade it on contra. Okay, it's not subject to margin, requirements and all that. So hopefully you sleep better at night. I hope that answers your question. For more detailed comparisons, we are actually putting up a post on this because we were just at a seminar 2 days ago, and a whole bunch of option traders were asking the same thing. Yeah, but your butterfly, strangle, straddle, and all that. No, you can't do that with warrants, right? It's really for you to either go long the market or short the market by a put. You don't buy both. Why? Because you'll lose what? Some people, very good question. Some people have said to me, yeah, buy both lah. But if you buy both means you're neutral on the market, right? Then don't do anything. If you think the markets are going sideways, don't do anything. Why? Because you'll pay what? Time decay. So you're just paying time decay when the stock is doing nothing. In fact, whenever you think there's no volatility, save your money. Don't do anything in the market, right? Only when you think there's volatility. And so far, I think 2024 has been highly volatile, especially since July, right? Record highs in the US, and then you've got, record near short-term record highs in stocks, etc. And then, of course, August happened, and then apparently we're in September again. Then there's October, and then there's election. So it's a very exciting last quarter, I would say.
Yep. Any other questions?
We will always be there. So that's the premise of, like a warrant issue. Yes, yes. So options, if you want to exit, but there's no buyer, you can't get out. If you want to buy, but the seller is very far away. Yeah, it is very far away. And that tends to happen when stocks get very volatile, right? It's very far away. Then if you don't want to buy, you want to buy at a price that's closer to the bid. Yeah, you can't, right? But with a warrant, you can, because we are always there to track the underlying. So we always have bid and offer prices. Yes, sir. Okay, so all securities under 20 cents in Singapore have a minimum bid and offer spread of 0.1 of a cent. So I mean 0.001. That's the minimum. And that's what you should always be looking out for. So anything that is wider than the 0.002, we often say is on wide spreads, don't buy it. Yeah. So that's the minimum spread. Anything above 20 cents is 0.5, 0.005. And that's just standard, right? That's standard SGX spread rules. Yes. Yes. Correct. Yes. 20 cents and 20 and a half. Yes. 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 That's a warrant or tax spreads. Anything one? Paper, you have paper account trading?
Meaning demo account, I mean. Yeah, you can actually use demo account, but if you want to use demo account, I think on a real trading account wise, certain our platform do it through scrapbook. If you want, you can just add a pseudo position through scrapbook if you want. But it's through the website lah. Yeah, I think through the app, I don't think you have, but you can open a demo account on the app, but that's a bit more troublesome lah. Yeah. So usually I recommend if you can do a pseudo paper trading, you can do that through the scrapbook pseudo position adding method. Yeah.
Sure, sure. So I think you just request Phillip, and then they will send it to you tomorrow.
Email us your detail. You can look for one of my colleagues to note down your name, then we will send to you. Yeah, so you must tell my colleague who you are.
I tell you what, why don't you just go to my colleague?
Yeah.
You put your email with him, I'll send it directly to you tomorrow morning. Yeah, so whoever is interested, then get a free bag as well. Those examples I did it live though. So, but if you want, so what I tend to do, my promise is when I'm here at a seminar, you know who to look for. And if you ever have any problems with warrants, you can look for me, Jamie. I'm available on the hotline. So that's our promise to you guys, that we'll be there along your warrant trading journey. And if you needed me to demonstrate the selector tool further, I can do that as well on a Zoom call or whatever. So let me know. But the examples we have is just one example on the PowerPoint slide. Yeah. So, but you can fiddle around with the warrant selector tool on your way home, to see how it works. Commission. Yes, so the commission is just like shares. You pay for it directly to Phillip. We're not a broker. So you trade all these instruments on Phillip, and the brokerage is typically very small because the cost of the warrant is so low, right? And the clearing fees is minimal because, again, the cost of warrant is so low. So it's all paid to Phillip depending on what your commission rate is.
Yeah.
Minimum is 100. So that's a minimum bought lot, which is for shares as well. Yes, it can be. You probably wouldn't because your commission will be more, right? So maybe you trade a little bit more than $2 last. And then, of course, like I said, the $3,000 minimum value promo, as long as you buy one, you get $88 back on your cash. And hopefully you make money. I think that's a real aim, right? Not because you want to make $88. From Macquarie. Yeah. Okay.
So I think we have some time. So let's end the Q&A here first. Right. So thanks everyone for joining us for the session online especially.